friends, and welcome to KBVS Snapshot. I am Ranti, and today I get to chat with Mr. Peter Kim, Head of Global Business Group and Managing Director of KB Sekuritas. Good morning, Mr. Peter.
Morning, Ranti.
Thank you for taking the time and visiting our studio.
My pleasure.
Like I said, today I do believe we'll be talking about your report.
Okay.
I do believe it will be very insightful for our KB friends in Indonesia. So let's just go dive into the first question.
Yeah.
In your report, you describe the US economy as being stuck between inflation and deflation.
Yep.
For everyday investors, what signs should we pay attention to that show which direction things are heading?
So, for all of your readers and viewers, they may hear a lot of these news. Every day, it changes from maybe recession, then you have inflation, and it changes again. And I call that the twilight zone. And the reason why we have this twilight zone is because every time the economy weakens, policymakers are very quick to react to support it. So you've heard about the spending bills, fiscal stimulus, then you got the interest rates. Also will react every time the economy weakens. So we're not expanding because if we expand, they start to tighten the policy. If we start to contract and weaken, then you stimulate. So we've been in this for about 4 years now. And I think because of that safety, the stock market is taking confidence that it's not going to fall too much. Therefore, its upside trajectory is going to be continued for a long time.
I see. And if those signs is actually turning negative, how quickly do you think this market will react?
So rather than asking when the market will react, because market will react every day. Nowadays, the stock market doesn't have a big trend. It just reacts to news like everyone else in the world, right? Everyone is so short term. They watch their phones on every little news and then they make decisions. I think the reaction, if something negative happens, is the policymakers. It's important to watch the policymakers. If the market falls because they think there's a recession coming, then, as you heard about Mr. Trump, they'll say, cut rates immediately, right? And then the market will rise. So I think we're in this stage where if there is a negative news, and if the market falls, and if your favorite stock really corrects, I've been recommending you buy by using that opportunity. Don't panic with the market. You react because the policymakers will support any negative news.
Okay. You mentioned Trump. So we'll be talking about US and China, which has been going on for months.
Yeah, years.
Okay. Oh.
Years.
It's actually years, yes. Okay. You also mentioned that the outlook for inflation depends a lot on the US-China talks, right?
That's right.
How will different outcomes like a deal, no progress, or even rising tensions affect the global market actually?
Very good question. And I think probably one question that I don't really have big confidence on which way will go because, you have two people, Mr. Trump and Mr. Xi. I challenge anyone who thinks they understand how these two guys think, right?
Okay.
I still don't understand how Trump's mind works, and nobody knows what Mr. Xi's mind works. So when you have these two big superpowers come together, two big egos come together, the result, I'm not sure how it will roll out. However, I can give you from my meetings with right now about almost 50 meetings with global investors. They believe the consensus tariff will go from about 15 to 25%. 15% is the base case because that's what Japan and Korea got. Yep. India got 40 because they're in the bad books of Mr. Trump. So if they go to 40, then it's almost like a war, right? So I don't think Mr. Trump will go for war because clearly China is the only country that really stood up to US. They don't want to get into a big war with China, but they do want to show that they're in charge, US.
Okay.
China either will say, we'll give you just enough space so that we can come out of our trade agreement with some sort of respect. So I believe that we're probably looking at maybe 20-25%
Okay.
would be a good outcome for both sides, where they both have a little bit of respect and faith. If they go below, then it's very good outcome. If they go above, then we start to see tariffs possibly impacting inflation. And you have to remind yourself that China right now, you may heard about this thing called involution.
Oh, yes.
China is in a very, very weak economy. And in order to try to support the economy, they are trying to export their way out. And the fact that China is the biggest manufacturing country, if they start to export this cheap product with very good quality, then that would be deflationary. So, you know, there's a lot rides on this. I think I'm not even sure when we'll see this trade talk finish.
Okay.
Maybe by the end of the year. But final point on US-China trade talks is that just 25%, 30%, 15%, that's not the end of the trade talks, because there's going to be other conditions.
Okay.
Yeah. So I think the after the tariff agreement, then you'll see maybe China start to say, now that we are done with US, we're going to do what US did, which is to talk to each country individually. So there's a lot more way to go before we really see the full picture of the tariff situation.
Okay, then you say that you share pretty much a lot of insight regarding the relationship between US and China, but I want to know, do you think the investors are already preparing for one of these outcomes, or are they actually still waiting?
Good question. I think they're waiting. I'm waiting. I think what we have to be mindful is that the market is giving the benefit of the doubt, right? Markets rising, all-time highs. US, Japan, Korea is at an all-time high now. So normally when markets are this strong, it's almost, they'll say, the market is expecting the best outcome. It's priced for perfection. I'm not sure I agree with that this time, because I think, as I said, the policymakers are ready to respond should markets or economy weaken. So again, if there is some sort of a negative surprise and market corrects, be ready to buy rather than trying to panic and then to try to protect your portfolio.
Okay,
Yeah.
then we'll take a note on that. The next thing I'm going to ask you is something really interesting from your report. You talk about the gamification of finance. With retail investor driving more of the market, do you think this trend is sustainable, or could it lead to another bubble actually?
So the gamification of finance is a growing theme around the world. Now, what happened? You remember COVID?
Yes.
From COVID, everyone got stuck at home, and then companies, brokerage companies, got very clever by installing a very, very friendly and easy to use trading apps, where from your phone you can make investments.
Yes.
It now become a global phenomenon. If you notice your trading apps, it's increasingly becoming something like a game.
Yes.
It's so easy, you get addicted, and also a bit of gambling, right? Stocks now no longer investments, it's a bit of gaming, a bit of gambling. So even my clients who say, I invest for 5 years, I look at long term. But I bet you, once he buys a stock, he will check every day, if not every hour. And I think everyone, don't say, yeah, me too. I buy a stock and said, I'm going to leave it aside for 3 years. Now I check it every day.
Okay.
And I think that is ADD, attention deficit disorder. Me too, everyone. It's not just our kids. And I think that is being led by US financial companies. Think about this. US companies, financial companies, they are usually weaponizing the mobile phone in making stock markets into one global casino.
Okay.
They are the best at financial innovation. Americans are best at technology, and they're best at marketing. Those three that they are very, very good at, they're world champions. They are now formulating a business model based on those three strengths. And I believe that's why I continue to believe that the US stock market will outperform other stock markets.
Oh, I see. I would like to ask another question regarding of it. And if a bubble were to burst, what could set it off actually, you think?
Well, easiest thing is that if there's a war, of course, right? But now we've had Russia-Ukraine war. Even people don't seem to think that war is going to derail it. But Russia-Ukraine is a very isolated war. It doesn't really affect the global economy. Now, if there's a war of a greater scale, that would affect a true war, of course. Second is that I do worry that the tariffs will eventually impact inflation. And the markets are rising because they are confident that if there's any weakness in markets, the US Fed's going to cut rates. If inflation really becomes material, and then they consider it to be maybe getting a little bit out of control, then that safety net of the rate cut is gone. So I think that would be the other negative surprise. So there's a lot to watch, but I think what I suggest to your readers is that don't look at the news every day. Have a framework on what's important, what's not important. Ignore the not important. Focus on what you consider to be important.
I see. Okay, so while you're here in Indonesia, despite of me as part of KB family, as a retail investor, I would actually like to know your perspective about Indonesia's. So amid US-China tensions and supply chain shift, how do you see Indonesia positioning itself in Southeast Asia's evolving landscape? And with Korea and Indonesia strengthening their partnership, which sectors are most likely to benefit from this collaboration?
So last week we just finished a global conference in Seoul, where we had over 100 global investors. We had very famous speakers. Like our partner Jeffries, a global strategist. We have a US economist from GAFCA, a very famous macro research, and of course me. Now, interesting that all of the speakers agree on one sector that they think that is very bullish, and that's commodities. They said that commodities is underinvested. That the commodity cycle is due for a big bounce. Whether it's industrial metals or precious metals, they're very bullish. And Christopher Wood, he's particularly very bullish on mining. So Indonesia is pretty well positioned. I think that maybe is starting to be reflected in your stock market, even though recently it's been volatile. And of course, with the US-China trade talks, if it comes out reasonably peaceful, Indonesia is also well positioned for that. There is one risk though, is that perhaps the currency volatility is going to maybe a factor. Of course, Indonesia being very dependent on currency for not just for your export, but also for your capital markets. So I do want to keep a keen eye on the currency situation. If the currency is relatively stable, then I think Indonesian market looks good, especially your commodities and mining sector.
KB friends, you can go to kbvalbury.com and check out research coverage regarding the commodities and the mining industries. We do have our analysts make a report about it. And actually, I would like to also ask, given these changes, how can Indonesia serve as a bridge between Korea and other Southeast Asian nations to drive regional growth?
So obviously, Korea is very, very interested in doing more with Indonesia. Of course, we're here. My division continue to see ways we can exchange ideas and play to the strength of the two countries. Broader macro collaboration, I think Indonesia, you have a very strong population, which we don't. But we have a little bit more sophisticated stock market. So the two strengths and weaknesses could be a good fit. I do think that I don't know if you know about how Korean retail investors are one of the biggest stock investors to US. Over $150 billion of US stocks are bought by Korean retail investors. Did you know that Korean retail investors are combined top 10 stockholders of Tesla?
Really?
Yeah. My US clients are fascinated about how Koreans could be such a big investor just within a couple of years. And I've had some high-ranking officials from IDX coming to Korea, wanting to see how they can attract that flow. So that's an interesting possibility. If Indonesia economy starts to do well, and let's say these commodities becomes a very strong theme, maybe that's a way for Korean retail investors to look at Indonesia to have access to commodity cycle. So, just one of the ideas. I don't know where Indonesia is on crypto.
Okay.
$80 billion Korean zone of crypto. So these are all very interesting trends. And I think, based on, of course, the regulations, we want to stick to what the regulators want here. But if there are opportunities, I want to see if we can connect the two sides.
Okay, looking forward for that opportunity.
Yeah, I hope so.
Can you actually believe this is my last question?
Okay, ready.
Okay, so looking at 2025 and beyond, what global risk factors do you think will most influence capital flows into emerging markets like Indonesia?
Well, I already answered that, the currency.
I see.
US dollar, there is in the US, a lot of the investors are thinking that US dollar will weaken over the not just next couple of years, but over 10 years. If that's the case, then that's very good for emerging markets. Again, Indonesia being one of the more currency plays, if the dollar weakens and the emerging market currencies strengthen, that's very good news. And especially that it hits into a commodity cycle, even better news for Indonesia. I am not as bearish about US dollar as some of my clients are. I think maybe we are in a gradual weakening, but not type of a devaluation that a lot of the investors are thinking. So I think, again, currency, I told you already, you should watch that. But I think Indonesia is well positioned. I think important point I want to make is that you've seen how the barriers to labor, the anti-immigration law, and you've seen what's happening in the US. I think we are in a very, very interesting period where every country has to fight for investments and good talent. US has been for 50 years the champion of getting the best talent around the world, regardless of their background, right? Now they seem to be reversing that attitude. Now it's opportunity for other countries, Korea, Indonesia, to do what US has been doing. Open up, welcome the foreign investment, welcome foreign talent. That will put your country in a very, very strong path. So that's my little recommendation.
Definitely not little. I'm pretty sure that KB France already taking note of it. Okay, so I can't believe this is actually done though.
Okay.
You are sharing such very insightful information to KB friends in Indonesia. So do you have any last message maybe you want to say to our KB friends?
No, I mean, for many of your viewers, maybe KB is a fairly unfamiliar company. We are the largest financial group in Korea. My division, we're looking at ways to expand our global footprint. We are very excited about our plans over the next couple of years. I hope this interview is just the first of many. There's a lot more smarter people in Korea than me. So I hope I can bring those people over to your viewers and hope that we can make a lot of money for our clients.
Once again, thank you so much for taking the time coming here.
Thank
and
you.
then, as you say, looking forward for another interview session like this.
Yep.
Okay, then.
Anytime.
KB friends, this has been this month Marathon. See you on the next episode of Marathon.